pips, leverage, MetaTrader, stop loss, trailing stop. These are just some of the lingos that you're going to need to learn if you plan to do Forex trading. Hi guys, welcome back. Now, as you can tell, today we're going to be talking about Forex trading. Now, you see, if this is something that you would like to hear about, go ahead and hit that thumbs up button. Also, if you're new, please subscribe. You can also turn on your post notification, that way you don't miss it when I upload any videos. I normally upload videos on Mondays and Wednesdays on investing, personal finance, and business in general in Jamaica. I'm also on social media, so if you want, you can connect with me there. I'm on Instagram at JA_Radcliffe and Twitter at JA_Radcliffe2030. I'm also planning a giveaway. I'm planning to give away $10,000 to one lucky subscriber. I plan to do this when I get to 2,000 subscribers in total. Now, if you need more information on the giveaway, just go ahead and check the description below. All the information is there. I'll also leave a link to the video for the giveaway there as well. Alright, so let's get into the video now, guys. The Forex market. Huge $6 trillion market. It opens 5 p.m. Eastern time on a Sunday and closes 4 p.m. Eastern time on a Friday. Now, if you're serious about making money, this is where you want to be. You can basically make money 24 hours a day. Now, I'm sure you guys probably have heard this before. Now, if you hear anybody trying to sell you any Forex trading mentorship or classes or anything like that, I'm sure that's the first thing they normally start with, right? But we're not going to take that route. We're going to start from the bottom. We're not going to try and pretty up anything as we go along. Now, the first thing I'm going to do is basically find out what is Forex trading. Now, you see, in its simplest form, Forex trading is pretty much when you use your Jamaican dollars and buy US dollars, or if you have your US dollars and you sell it to get Jamaican dollars. It's pretty much the same thing. So when you're trading on the Forex market, you're basically pitting two currencies against each other. So for example, you can have like the dollar and the pound. What you do when you trade on the market is you're going to pretty much bet that maybe the dollar is going to become stronger than the pound in this particular instance over this particular time frame. On the Forex market, currency is traded as pairs. So you see, just like I say, you can trade the US dollar against the Jamaican dollar or the pound against the US dollar. You have to trade them in pairs like this to see if one will get stronger than the other so you can make a profit, or on the other side, if it gets weaker. You have different pairs out there, because you have even the Aussie yen, where you pretty much trade the Australian dollar against the Japanese yen. When you're trading on the Forex market, you have 8 major currencies. You have the United States dollar, the Australian dollar, the New Zealand dollar, the British pound, the Japanese yen, the Swiss franc, the euro, and the Canadian dollar. Now, when you're trading, what you're going to trade, if you're trading the major currency, is any combination between these 8 major currencies. Now, you don't only have to trade these 8 major currency pairs. You can also trade what you call exotics, which is pretty much currencies that fall outside of these pairs. So, for example, if you look at your Jamaican dollar, you would say that it's an exotic in a sense. Mark, I don't really sure if them trade the Jamaican dollar still, but I'm going to probably check that out as well. Now, when you're trading Forex, right, the person that you see normally putting up the videos and saying that, hey, they're a big Forex trader and so on, they normally take up the smallest part of the whole Forex market. Now, who actually takes up majority of the market is actually the big banks. So when you go ahead and you check out all the big banks in the world between the US, Japan, the United Kingdom and so on, you're going to find banks like your JP Morgan Chase, your Barclays, your Deutsche Bank, and all of these people. These are the ones that pretty much move the largest volume of foreign currency through the market at any given point in time. And to be honest, these banks might even have more sway in Forex than even the governments that are in charge of the money that they're actually trading. Now, while you have the retail trader like us that are actually trading, and also the big banks that are doing the top level trading, you normally would have even governments and different companies that also trade foreign exchange. Now, for example, in Jamaica here, a lot of our debt is in US. Now, in order to pay back our debt, we have to pay it in US. So if it is that we don't have enough foreign exchange to pay our debt, what we're going to have to do is to buy it. We need to buy it from somewhere, get it into the island, and then repay our debt. Now, if you look at it from a company's perspective, it's just the same thing. If you have a company like Grace Kennedy is a Jamaican company, but they're operating across the world. Now, Grace Kennedy could be buying from suppliers in Brazil, and that supplier in Brazil is not going to take Jamaican dollars for his payment. He's going to want probably either whatever the Brazilians use or US dollar, which is in essence the universal currency in the world right now. So Grace Kennedy will therefore need to buy the US or whichever currency to pay these suppliers. They could even have different branches or different companies situated in these places that they need to pay. Probably even, let's say, to set up the company, they need to pay some money here. So in essence, these are the major persons that participate in the Forex market. So as I said, you have your big banks, your JP Morgan, your Deutsche Bank, your Barclays. Then you have your countries, so like your Jamaica, that would want to buy some US to do their payment of their bond. Also, you have your companies like your Grace Kennedy, possibly if you go overseas, you have your Apple that operates internationally. And then, to be honest, at the bottom of the table, we have our retail traders. And that is where we would come into play. Now, trading foreign exchange currency is something that happens pretty much around the clock. You start trading foreign exchange at 5 p.m. Eastern time on a Sunday in the United States, and then the market will close at about 4 p.m. Friday evening in the United States again. Now, the reason why the market opens at 5 p.m. in the United States is because the market is not actually open in the United States. It is open in Australia. Now, Australia is about 12 to 13 hours ahead of us. So because of that, once it is that they open, the time here is going to be 5 p.m. Eastern time, roughly, give or take. Now, what this goes to show, guys, you see, if it is that you plan to trade Forex, whether it's that you're a morning person or you say you're a night person or whatever you want to say, if even say you're an evening person, you will get some time where you can go ahead and trade on the foreign exchange market. When you want to participate in the Forex market, the first thing you need to do is to actually find a broker. So just like with stock markets, you need a broker to actually facilitate the trades. When you're deciding on the broker that you're going to use, make sure you do your research. Reason being, you don't want to choose a broker that is not duly registered and pretty much regulated and so on. And then when you send your money over to them just pretty much take it and gone. After you decide your broker, the next thing you need to do is to decide your platform. Now, while I was doing my research, it seems that Forex trading actually occur on two major platforms. Now, you have your MetaTrader 4 and you also have your MetaTrader 5. Now, when I checked, what I actually learned is that MetaTrader 5 is not necessarily an update to MetaTrader 4, but MetaTrader 4 is what Forex traders prefer to use in a sense. Now, with MetaTrader, you can actually trade on your phone or you can trade on your computer. It doesn't really matter. The only drawback is when I was checking, it seems like MetaTrader 4 is no longer publicly available in a sense. You would need to register with your broker and let them know that you're planning to use a MetaTrader 4 platform to trade, and they would then provide you with the link on where to get your MetaTrader 4. Now, to be honest, trading with MetaTrader or the different Forex trading platform is really and truly only one way to actually participate in the market. You can easily buy currency futures, currency option, or if you're on the stock market and you want to participate, you can buy ETFs that trade in currencies. Now, in everything that you do, you need to actually find the advantages and the disadvantages. And Forex trading is no different. Now, one of the biggest advantage of Forex trading that I have noticed is that it is decentralized. Now, what I mean by it's decentralized is that there is no one place that is solely responsible for Forex trading. Now, if you notice, I told you that Forex trading starts in Australia at about 8 a.m. Monday morning. Now, when it's 8 a.m. in Australia, it's about 5 p.m. in New York. And that is when Forex trading starts. Now, after you have a closing down of the Australian market, then you have another market that pretty much takes its place. So in this case, you might have the Japanese market taking over from the Australian market. And then after that, you would have the UK market until you have the New York market that closes out the day at 4 p.m. Now, if it's not a Friday, it doesn't close because you're going to have the Australian market opening up very soon after. So no one market is in charge of all that Forex money coming through every day. Now, the next thing in Forex that is very good is that you don't normally have commissions on Forex trading. Now, the reason for this is that when you're trading Forex, your brokers normally buy and sell for you on a spread. Now, the spread is basically the difference between what the broker is actually buying it for versus what they're selling it to you for. Now, in simple terms, if you go to NCB and you decide to sell them some foreign exchange, or you're going to buy some US dollars from them, they're going to sell it to you at a particular rate. Now, to be honest, if NCB decides that they're going to sell the US for about, let's say, $140 to 1, I can guarantee you this is not what they purchased it for. If you check their rates on their website, it might be a case where they spend like $120 to actually get the foreign exchange that they're going to sell you, which might not really be the case, but hypothetically speaking. Now, if they paid $120 for it and they're selling you for $140, they just made $20 off of every dollar that they bought to sell to you. So this is how most Forex brokers make their money. The spread might not be as big as that, but there will be a spread. The next big advantage with Forex is that it's leverage. Now, to be honest, if you decide to put like 100 US, or let's say on the tall end you put 1,000 US to trade in the Forex market, based on the fact that someone is going to tell you that the Forex market is a $6 trillion market, 1,000 US is not even a drop in the bucket, to be honest. It's more like a drop in the sea. So what happens here is that when you put in your 1,000 US, the brokers leverage it. So you may put in like 1,000 US and then you notice that with your 1,000 US, you have a buying power of, let's say, about 100,000 US one time. And this is how you actually make your money. Now, with the leverage, it pretty much boosts your money up so you can make a bigger profit even though you're coming in with a smaller cash base. Now, while leverage is a very good advantage of Forex trading, it also starts one of the biggest disadvantages. Now, just the same way where you can invest your $1,000 and you are able to spend up to 100,000 US, and because your trade is winning, you get the profits from that by using the leverage trade. It's just the same way where if you start to lose, it starts to eat up your 1,000 US in a sense until pretty much you have nothing left. It will not stop you out of the transaction unless you as a trader had set a stop loss, or you set a particular point in time where your trade should automatically cancel out itself. So if the trade doesn't cancel, you basically can have a case where your account just pretty much wipe out on one bad trade. Now, to be honest, you see right now with Forex trading, one of the biggest drawbacks right now for me personally is the high level of scam in the Forex trading market. Now, while this is not an inherent disadvantage of the market, it is a disadvantage that is brought on by the market, if you understand what I'm saying. Now, let me show you something. In the past 2 weeks, I've had like about 5 different new followers, and in each of these followers, I noticed like pretty crisp pictures of person on their phones drinking their coffee, or they're on their laptops and so on, showing that they're forex traders, and they want to give you the idea that they're very profitable traders and they pretty much have all the freedom in the world to do what they want, so they're just doing this. Now, when I check the accounts, I can see where a lot of the pictures for these accounts were just uploaded. So they just uploaded like 6 hours ago, and they have 1 like and so on. So you can see these are basically fake accounts. Now, what they want for me to do is pretty much ask them about their lifestyle. Now, when I ask them about their lifestyle, this is when they're going to try to sell me something forex related. And this is where I would be hooked in a sense if I didn't know that this was basically their gameplay. If you look right here, this was an account that I pretty much screenshot recently. Now you can notice that these pictures basically came up on the same time. They're like uploaded one time. So I know point blank that this is a scam account right now. I don't even look at them again after that. Now, to be honest, people, you see, if I was to go through everything as it relates to forex trading, we would be here for a couple of years based on the amount of information that I have seen, and I have just basically started to scratch the whole surface of it. And before I started this video, I actually asked you guys what exactly is it that you wanted to learn about forex trading. Now, one of the answers that I got is everything. Now, while I may never be able to cover everything in forex trading, I think the easiest way for me to actually cover as much of the content as I possibly can is to actually start trading by myself. So if I am going to immerse myself in the entire forex thing, I think that is the best way for me to provide all the answers to the questions that you guys may have as it relates to forex trading. I plan to try and use as much free resource as possible. No, I'm not going to pay for any classes or anything. I'm just going to try and use free resources. So maybe some YouTube videos. And I'm always going to try and find persons who are in forex trading who may be able to answer certain questions. Because as I always say, depending on what you're doing, always try to find someone who is in the same line of work or has the same interests as you. Now, while I know that this is going to take a long time, because to be honest, I am still learning stock trading, and understand me, and I always say I have like a little bit, like about an average understanding of stock trading, to be honest, that's what I would say. So I know this is going to take some time, so I'm going to be learning this from scratch, just like you guys, and then I'm going to be pretty much posting everything that I learned for you guys. So back to one of the questions that I actually got when I made the post about doing the forex video. It spoke about how to transition from a demo account over to a live account, and when do I think is the best time to do it. Now, to be honest, I cannot tell you when there's a best time to transition from a demo account over to a live account, because it all depends on you. You need to ensure that you learn as much as possible. You're as comfortable as possible trading on a paper money account before you move over to putting your own money in. Now, when you're trading on a paper account, you need to treat this like it's your own money you're spending. Yes, you may be able to get a lot of money in paper trading, but don't take all of it. You can get, like, I think my paper trading account was 100,000 US. Don't take that much. Take like 1,000 or 2,000 US. Let it replicate what you would be able to actually fund the account with, and then you trade from here and see how it affects your trading. You want to do this, people, because you see, one bad decision in forex trading, from my understanding, will cause you to lose a lot of money. So make sure you're always very comfortable before you start putting your money out there in forex trading. Alright? Now, thanks for watching, guys. If you like the video, please leave a thumbs up. Also, if you're not subscribed as yet, just hit that subscribe button. Alright? Turn on your post notifications as well, so every time I drop the videos, you're going to know. Now, as you all know, I am not a licensed financial advisor, so before you make any decisions as it relates to your money, please speak to a licensed financial advisor first. All right? So until next week, people. Bye-bye.